How strong is your financial foundation? Well, I have a guide to help you build a strong financial foundation. We'll break it down in 6 different areas. First one, understanding your cash flow. How much you have coming in versus what you're paying out on bills or Starbucks or whatever it may be. Number 2, create a budget. By doing this, I would say look at your last couple months of bank statements and credit card statements and see what you're spending your money on. What are the patterns? What are wants versus needs? Maybe we can eliminate stuff, or we can create a savings account to help build up for your first home purchase or maybe a move up situation or investment property. Number 3, start an emergency fund. Do you currently have an emergency fund? How much do you have in there? Typically, we'd like to see a minimum of 6 months of income in an emergency fund for those what if moments. What if your car breaks down? What if you need a repair to your furnace, air conditioning, maybe roof? It's always good to have that emergency fund for those what if moments so we don't have to extend ourselves on credit to pay for those what if moments. Number 4, prioritize reducing debt. So let's look at our debt. Now, how much do we have? Where can we attack it? I'd say start with the smaller balances, especially on the credit cards. Once we eliminate those, that frees up a payment. Then we can take that payment and put it to use towards other debts. So to chop it down, let's attack the smaller ones and then go after the bigger ones as we get the smaller ones paid. Number 5, automatic payments or automate payments. This is a good practice because we get busy. We tend to forget from time to time to make the payments. So if you make it automatic and automate it, you should be good to go, especially for your car loans as well as your credit cards. And the credit card, for example, if you set it up for a minimum payment, you can always go back and add more to it and pay it off for that month or pay the majority of it, whatever you want to do, but at least set up for a minimum payment. Last, monitor your credit. This is always good practice to monitor your credit maybe every 2 to 4 months, just because you can see what's going on in your credit and find out if there's any negative things on there that you can take care of in a timely fashion. Unfortunately, there's identity theft going on quite a bit these days, so it's just good practice to do it. I would say a minimum every quarter or maybe twice a year. So keep that in mind. To summarize these principles, here are a couple of key words that I would consider. Discipline. To reach your goals, you need to have a plan and stick to it. Budget. This is a key aspect of building a strong financial foundation. Automate. Automating payments minimizes chances of missing a payment and impacting your credit. Patience. Creating healthy spending habits and financial awareness takes time. Now that you have a guide to build a strong financial foundation, let's connect and have a conversation to see how we can help you.